Thank you. Good afternoon, everyone. I am pleased to welcome you for the 3Q FY18 conference call of NCC Ltd. From the management side, we have Mr. Y.D. Murthy and his team. Over to you, Murthy, sir.
No, here Y.D. Murthy today is not available. He has gone outside for some urgent meeting. He will join any time here. I am here as R.S. Raju, Associate Director of Finance and Accounts, CFO of the company, and Mr. Banoji Rao, Vice President of the company, and also Mr. M. Srinivas Rao, General Manager of the company, and Mr. Sivaram Krishna, Senior Manager of the company. So now, shall I start the opening remarks of the company?
Yes, sir. Please go ahead.
Shall I proceed? So good afternoon to all of you. So you might have seen the results of the company, and in fact, we would like to inform to all of you that in third quarter, the company reported some good results, particularly from the profits point of view and order book point of view. But of course, revenue front, some concerns are there. So now I give the remarks one after other on the order book, and thereafter followed by the revenue, thereafter followed by the margins, thereafter a balance sheet. So if you come to the standalone, the order book, when you come to the order book, in the current 9 months period, the company secured an orders of rupees 20,416 crores. And in the third quarter alone, the company secured 12,256 crores. This is the highest order booking in the current 9 months period, as well as in the particular quarter of in the history of the company. So, as against the company's planned order book of some 3,200 crores or so, the company secured 12,256 crores. There is a substantial growth in order book from opening order book of 18,088 crores to rupees 31,627 crores as of 31st December 2017. So, which indicates about 75% increase in the order book in the current 9 months period. So, the company expects about 3,000 crores plus orders in the fourth quarter. As a result, in the total 12 months period, the company secures about 25,000 crores of orders. So when come to the segment wise, in the building division, this is a core segment of the company. We secured orders about 57% of the total 21,600 crores order book taken place in the building division, about 12,317 crores. And orders executed in this division are about 2,467 crores. So at the end, or as of 31st December, in the order book, the building division share is 15,882 crores. Comes to the roads, you know that earlier we are not operating much on the roads division except 1 or 2 packages. We have only 563 crores value of orders at the beginning of the year. But now in the current 9 months, particularly in the current 3 months period, more orders in the road division also taken place. About 4,083 crores orders were secured. Now the roads order book size increased to 4,225 crores as of 31st December 17. In the water and railways, we have 3,314 crores at the beginning and 3,057 crores new orders received in the 9 months period, and about 1,584 crores were executed, and the order book now stands at 4,675 crores. Comes to the electrical division, we have 1,609 crores at the beginning, and in the current 9 months, 762 crores value of orders were booked, and the order book stands at now 1,647 crores. Similarly, in irrigation, we have 1,904 crores value of orders at the beginning, 900 crores value of orders received, and the balance are the order book stands at 2,571 crores. This power, there are power, metal and others, there are no any significant, only some 71 crores residual orders are there. And others, mining division, we have 1,874 crores at the beginning, and at the end we have 1,620 crores after adjustment to the GST. So other segment we have about 424 crores. So international we have 962 crores in the beginning, now come down to 513 crores because we are not booking any orders in international countries. So with all this, the total order book now stands at 31,627 crores. This is almost all about 70% growth in the order book, opening order book of 18,088 crores. Comes to the revenue, has reported a turnover of 1,879 crores for the third quarter, as against 1,943 crores in the same period of the previous year. So here you know that the current year our numbers excludes the GST, whereas the corresponding numbers are including the GST. So basing on the numbers what we reported, there is about 6% decline in the turnover. But when you give the adjustment of GST, in fact it has been a growth of roughly 9 to 10% over the corresponding quarter of the previous year on a comparable terms. So now the company has reported an EBITDA of 255 crores and a net profit of 100.36 crores as against 174 crores and 58 crores in the corresponding quarter of the previous year. So now there is a growth in PAT about 72% in this particular quarter. The company has reported an EPS of 1.81 as against 1.05 in the corresponding quarter of the previous year. So when come to the gross margins of third quarter, reported a gross margin of 21.27%, including bonus amount of rupees 60 crores received from UP Expressway project. So in the third quarter, the numbers includes a bonus of rupees 73 crores what we received from the UP Expressway project for early completion. So that bonus 73 crores that also taken place in the numbers. Out of 73 crores, 60 crores participated at gross margin level and also at a better level. And after giving adjustment for tax and other things at the net profit level, about 40 to 42 crores has participated in the net profit level. So the primary reasons for increase in the profit level at the gross margin, gross profit, EBITDA, as well as in the net profit, one is the bonus receipt from the UP Expressway. The second one is a general increase or a general expansion taking place margins at all levels. So there is an improvement in the EBITDA as well as the gross margins in the third quarter. So when come to the 9 months period, reported turnover of 5,265 crores, including other income of 91 crores. So after adjustment of GST of about rupees 200 crores, the revenue report works out to about, it is not 200, 400. So the revenue report works out to 5,656 crores on a comparable terms, which results about to some 4 to 5% decline over the corresponding 9 months of the period, corresponding 9 months period of the previous year. So when come to the profit, the company has reported a EBITDA of 550 crores and net profit of 184 crores for the 9 months period ended 31st December 2017, as against 511 crores of EBITDA and 162 crores of net profit. And reported EPS of 3.31 in the 9 months period, as against 2.91 in the corresponding period of the previous year. Up to now, the EBITDA reported for the 9 months period is 10.66%. After excluding the bonus, the EBITDA report is 9.63%, as against 8.68% of the corresponding period of the previous year. So, which means there is an increase in the EBITDA of about roughly 8%, and 0.8%. And again, it represents partly on account of GST adjustment of 0.55%, and 0.3% represents a general increase in the margins. So in the current 9 months period in the results, the GST disturbance is there at the turnover level and the margin level. To understand clearly, just we explain this one. So after excluding the effect of such transactions, there is a general expansion taken place in the margins and 0.3% at EBITDA level for the 9 months period. So, when come to the interest part in the operating results, in the current 3 months period, there is an increase in interest cost in third quarter from rupees 100 crores to 104 crores. So in the last 2-3 years, always there is a decline in our interest cost, both in absolute terms as well as in the percentage terms. But in this quarter, a slight increase was happened. The increase primarily on account of increase in debt position, and also the increase in mobilization advance. So nowadays, the mobilization advance, whatever we are taking, are mostly about interest bearing. Earlier, that much proportionate is not there, and gradually the interest bearing mobilization advance share is increasing. So which, because we received some new orders where we received some mobilization advances, which translate some additional cost on the mobilization advance into the third quarter results. As far as the 9 months period is concerned, the interest, there is a decline in absolute terms from 293 crores to 279 crores. So the main reason for decrease here is not the reduction in the quantum of loan. In fact, the quantum of loan increase in the current 9 months period. But despite that increase, there is a decline in interest cost, which translates that there is a decline in the average interest cost of the company. So the average interest cost of the company for the last year is about 11.74%, and which has come down to 10.87% for the 9 months period of the current year. As far as comes to the balance sheet, about the debt is increased about 100 crores from September 17 to December 17 this quarter. About 107 crores is increased. The increase primarily on account of procurement of machinery. About comes to the capex, during the 9 months period, there is a capex represent plant and machinery about 226 crores. So all of you are aware that the company secured good amount of orders. To execute those orders, we need the plant and machinery. So in the current 9 months, we procured about 226 crores value of machinery. So to support the execution of the new orders. So there is significant increase in the order book, which again augmented required this machinery and equipment. So these are the major aspects. If any more thing you require, if you ask, so that we provide or clarify some of the items what you have. So now it started by 2:30 and just to try to close the call by 3:30 since we have some other meetings thereafter.
Sir, should we open up for questions?
Yes.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take the first question from the line of Mayank Goel from BNK Securities. Please go ahead.
Good afternoon, sir. Thanks for the opportunity and congratulations on good set of results. Just had a couple of questions. Sir, as you have already explained, the margins had jumped because of a one-off bonus item included. So when we exclude it, we get a EBITDA margin of roughly around 10.2%. So can we expect this to remain stable? Your guidance for FY18 and FY19 on margins front. Hello?
FY18 and FY19 also you're asking.
Yes, sir.
So, as far as this better margin is concerned, excluding the bonus, what our margins this quarter reported, those margins are sustainable.
Okay, sir. For FY19 as well, because we have a good order book, so we don't see any further increment for the next year as well.
About margins?
EBITDA margins.
EBITDA margins front at this moment, we can see already the expansion taken place in this second half year. So we expect to sustain that increase in margins in the FY19.
Okay. Okay, sir. So on asset monetization front, in relation to the TechnoCity, the last quarter we had received around 250 millions and a further amount of 630 millions was to be received. So what is the amount that we have received till now and what will be the timeline for the balance?
Entire amount, okay, first what we said, that amount we received in the second quarter, the balance entire 630 million we will receive in a month's time. Before March 18, that amount will be received. In a month's time, we will get that amount.
Okay. And lastly, sir, so what is the overall outstanding amount from subsidiaries? Investment plus loans and advances.
Well, about 1,600 crores is there, both investments and loans. Out of which 1,000 crores represents investments and 600 crores represents the loans.
Okay. So if we total 1,600 crores.
Yes, sir.
Okay, sir. Thank you, sir. If I have any further questions, I'll join the queue. Thank you, sir.
Okay, right.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, please limit your questions to 2 per participant only. We'll take the next question from the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Hi, sir. Good afternoon.
Good afternoon.
So my first question is with respect to your write-offs which you are taking against the investment. Can you just clarify that what kind is it related to the real estate only? And what
it is not real estate. International companies, construction business we are doing through 2-3 companies.
Okay.
So company decided to close the business there because of the environment is not that much favorable. So the companies are reporting the losses. You are aware that last year also reported the loss. So current year also some loss would be there. So as a result, the investment value come down. So to take care about the diminution in the value of my investment, the provision is made for the international companies.
Got it. Now, the second question, sir, with respect to your event that happened with respect to guarantees, the BG guarantee in the cash fund.
Yes,
how we have provided, have you provided anything in this quarter?
No, it is not provided anything for such item. And then we have strong grounds about that one. So it is not, NCC is not responsible for the delay of the project, and major part attributable to that owner, PT supplier and the SEMCOR. So as a result, we have not provided. Since the matter is in arbitration, we expect the matter gets settled in a period of 12 months or 13 months. So from here.
So incrementally, if your debt has gone higher by only 100 crores, have you applied a formula which generally remains is that the peak guarantee is 190 and then you have encashed your vendor guarantee? That's why the incremental debt is going just 100 crore over? Because
partly for that one, certainly.
Okay, because your encashment was much higher. I mean, so you have taken the banker, the vendor guarantee as well as provisions. You have taken certain against it.
Yes.
Okay. Thank you very much, sir. I'll come back in the queue. Thanks.
Thank you. The next person is on the line for Abhinav Bhandari from Reliance Mutual Fund. Please go ahead.
Yes, sir. Thank you for taking my question. Just a couple of questions. One is on this debt, if you could give the actual number as of December and also on the mobilization advance.
2,142 crores is the outstanding debt. The mobilization advance is about 915 crores.
Sure. And I mean, post GST, the receivables position which had slightly increased, has that come back now, or what is the receivable and payable numbers?
Yes, so the post GST, the receivable numbers increased, and from some of the clients, the issues are settled, and some of the clients, the issues are yet to settle. As a result, some 5 to 10% amounts they are holding. So now the receivables 2,117 crores or so is there outstanding as of 31st December 17.
Sorry, 2,000?
117 crores.
Sure. Sir, on this backlog now that you have a 30,000 crore plus kind of backlog, if you could give some color from FY19 perspective on what incremental capex you would need to do, and some color on the revenue growth guidance for FY19.
The current year about 250 to 260 crores capex will be there, out of which 226 crores already we spent in the first 9 months period. And next year also we expect to have another 200 crores capex to support the increased order book. And the increased order book now nearly, the order book stands at 31,000 crores. So thereby there is in the FY19, the top line increases. At this moment of time, we have not finalized our business plan for the year FY19, and it will be known precisely once that business plan is made. But certainly there is a steep increase in the top line would be there, which about 30% or so. So that how much percentage that will be known clearly. But as on this moment, we expect that minimum 30% growth would be there on the top line.
Sure. And just one last question. The QIP money that you have raised, should one be confident that this money now would be supporting the working capital and capex, and incrementally from a debt point of view, we are largely at peak now?
The support, whatever money we received, we use for supporting the working capital and capex, and not for any debt. So the debt now stands at 2,100 crores, and in normal course also the debt from 2,100 crores will come down to 1,800 or so. And when you use this money, we won't use for repayment of any of the debt from these proceeds. So when you put into our cash credit accounts, this helps us to bring down the debt about 1,600 crores or so by March 18. It is not the payment of debt.
Yeah. Perfect, sir. Thank you. All the best.
Thank you. We take the next question from the line of Parikshit Kanpal from HDFC Securities. Please go ahead.
Yes, sir. Congrats on good set of numbers. So just on this year's order inflow of 2,416 crores, so what would be the advances we would have received till now?
Advances not much received, and still a lot of amounts to receive. And as of this date, the mobilization advance stands at 915 crores. out of which about 500 or so relates to the new orders. And another 300-400 crores in a month's time takes place the advances.
We have already received 500 and we expect 300 to be received in 3 months.
300-400 crores.
Okay. And what will be the funded status of all these projects? I mean, because especially for the AP projects, there has been a tussle going on between center and the state. So
there are two type of projects AP, related to AP. So one is housing, that housing for the economically weaker sections. Under affordable housing scheme, under Pradhan Mantri Awas Yojana, the central government launched this scheme. Through that scheme, the state government started the projects. So the central government would provide 1/3 of the cost, and the state government to provide 1/3, and 1/3 the state government to make a tie-up with the HUDCO or some banks. So this is the finance scheme for the major orders received from the housing sector. And some projects we received related to the roads, about 4,000 crores for the capital city development of the Andhra Pradesh, for which the central government is providing for under this separate state scheme something. So with which they are calling these projects and executing the projects.
But have the funds already come in? And when do we expect to break
that? So in a part to mail, according to the schemes payments, the government submit. According to that one, central government release the funds. Sometimes they release, sometimes they may delay some 10-15 days, like that it would be there. It is a monthly, quarterly programs.
But when are we starting work here? Any idea? Next year only?
It's already it is a short time span or a time-bound programs or a fast-track projects. So already we started the works. The moment the LOI is issued, within a month or 2 months, you have to start a paperwork, designs, drawings, approvals, permissions, work fronts. All the works takes place, and the physical work will start after the LOI about 2-3 months, and the first bill will be submitted in just 3-4 months after the LOI received. So most of the works we have started, and some more works to be started, and the paperwork is going on. So like that are there.
And so just lastly, what will be the cash on books and net?
Sorry to interrupt.
Yeah, that's
Mr. Kanpal, may we request that you return to the question queue? There are participants waiting for their turn.
This last question, cash and net worth, sir.
So there are participants waiting for their turn. Thank you.
168. Okay, next question.
Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, please limit your questions to 2 per participant only. The next question is on the line of Abhijit Wara from Sundaram Mutual Fund. Please go ahead.
Yeah, thanks for taking my question. Sir, I have my first question is in this order book. Opening order book was 18,000 and order inflow is about 21,000. If I exclude the execution, then the closing order book and what should have been the actual closing, there's a gap of 3,000 crores. So I just want to clarify, was there any write-off?
The difference relates to GST. So in the orders, what the order value normally when the government wrote the order, in that order also includes the GST element. Okay, when we execute and when I recognize the income, at the time I have to recognize the income excluding the GST. To equate the order book with my top line arithmetical equation, and just we exclude the GST element, and after excluding the water bill, that only we are reporting as order book.
Got it. I got it. The second thing is this bonus, it was received in December quarter and January quarter.
Receipt.
Actual money.
Money received on 1st January 2018.
Okay, but you are able to show it in Q3 itself, is it?
Yes, we have shown Q3.
Is it allowed, sir?
It is allowable.
Sure, sir. Those were my questions. Thank you.
Thank you. The next question is on the line of Ujjwal Shah from Quest Investment Advisors. Please go ahead.
Yeah, thank you for taking my question, sir. Just wanted to understand more about the subsidiaries. Going forward, last year we have seen quite a few losses happening at the subsidiary level, be it...
Sorry to interrupt, Mr. Shah, so we're not able to hear you. Can you speak a bit louder?
Sure. Is this better?
Yes, better.
Yeah.
Thank you.
Yeah, sir. So the question pertained to the subsidiary performance. What is the company doing in order to improve the performance at the subsidiary level, or are we planning to shut a few of the subsidiaries? Basically, question pertains to subsidiaries like Nagarjuna Construction, Oman LLC, Dubai One, as well as at the urban infra level, we are planning to sell off certain real estate land bank that we had. So what is the update on the same?
Yes, as far as subsidiaries companies' losses are concerned, as you said, the management is so keen to bring down the losses from various subsidiary companies. As a part of that one, the amortization of some of the assets are taken place. As a result, some operations are already gone out from the books of accounts. So now if you take the commercial operations, what we have is the NCC Urban Infrastructure Limited, which last year sometime it has reported the losses in some quarters, and thereafter it has come to the profit side. And in the current 9 months period, this urban infrastructure reported a profit of roughly 7 crores, as against a loss of 300 crores of the corresponding period of the last year. Similarly, when it comes to the Oman and Dubai companies, so the Dubai company, more or less, the business was closed, and whatever loss it reported in the last year, that much loss won't be there in the current year and thereafter also, or hereafter also. So now, about international LLC business, Oman is concerned. Last year it reported the loss, and the current year also the loss is there, but not to that extent. And we are closing the business, and almost they are executing the last 2 projects. And by March 2018, about 85 to 90% of their order backlog they complete, and only some 10% would be there that they're planning to complete in a quarter time of FY19. So, and in FY19, the losses won't be there from the international LLC company and also Dubai company. So in domestic front, other small 2 companies are there, road projects, OB Infrastructure Limited, NET project, and another Pondicherry Dindivanam toll project is there. And this OB Infrastructure and the project, we are not expecting any loss. At this moment, it is reporting no profit, no loss, and sometimes it is reporting a little profit also. And Pondicherry Dindivanam is a small project, but reporting a loss. In a year, it reports 7 to 8 crores loss, and after 2-3 years, the loss will come down gradually once the interest costs come down. So, as a result, in the current year, the company's losses come down about 30 to 40% compared to the previous year. And going forward, almost all the losses will come down to very significant minimum levels. So that is basing on the management reactions going forward what we are expecting. So there is a significant improvement in the group companies' performance, they are bringing down the losses in the current 12 months period also. As a result, at the year end also, there would be a significant improved results we are expecting on a consol basis.
Right, sir. So, in terms of selling off certain land parcels that we had identified, so be it urban infra or at the Vizag subsidiary, NCC Vizag?
We have 2, one is Tallapur, we have already sold that one, and which we have explained or shown in the second quarter. And another land pocket is in Jubilee Hills of Hyderabad. That property also we entered into the agreement, we entered a development agreement, whereby we get about some 70,000 SFT built up area. and another land pocket in the form of NCC Vizag Urban. That dialogues are taking place, but we expect in a year or 2 years that also we plan to monetize. So, and other land pockets in NCC Urban are there. So the Urban is planning to sell some of its land pockets and use those proceeds to repay the loan what is taken from the parent company. So there is a business plan for the NCC Urban and to repay the 400 crores loan in a period of 5 years. So most of the part they have to pay by selling their land pockets and the balance through their operations. So that is the plan of monetization of the real estate assets.
Great, sir. Thank you. Thank you for such a detail.
Thank you. The next question is on the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Good afternoon, sir. Thanks for taking my question. So just two questions from my side. So one is on the exceptional loss that we have reported in this quarter of around 30 crores. Now, is this, we also reported a similar loss of around 59 crores in the last quarter. Are these pertaining to the same sale of land in Tellapur Technocity or a different kind of a...
that 59 crores what we reported to the exceptional item relates to Tellapur.
Okay.
Tellapur land pocket, we entered the agreement by which we know the price. So what the difference between the carrying cost and the sale consideration, the difference we have provided.
Okay.
That is entirely we taken care about that one. The 30 crores what I provided here relates to the international companies. What I explained now, the losses being reported by the international companies, by which my investment value is coming down.
Okay.
So to take care of the diminution in the investments, this 30 crores exceptional item we have provided in the third quarter.
Okay. So since you mentioned that we are planning to close these subsidiaries, is there a calculation as to how much more amount of similar losses can be booked over the next coming quarters?
In fact, there won't be any significant would be there, and some part around 20 to 50 crores in next 2-3 quarters maximum amount would be there. And there won't be any significant amounts we foresee.
20 to 50 crores over the next 2 to 3 quarters?
2 to 3 quarters.
And this would be for both Muscat as well as Dubai?
Yes, and also Indian domestic companies, Indian companies also if required.
Okay. The losses for closing out all these subsidiaries could be 20 to 50 crores?
Yes, yes.
And these would largely be provisions, in a sense, non-cash expenses?
Hello?
Hello? Hello?
Hello, excuse me, sir.
Yeah.
The management team.
I think we lost them.
They still connected. Give me a minute. Let me get a check. Ladies and gentlemen, we seem to have lost the audio from the management's end. Please stay connected while we reconnect them. Ladies and gentlemen, thank you for patiently holding. We have the line of the management reconnected. Over to you, sir.
Hello?
Hello?
Yes, sir. So you mentioned that we're looking at around 20 to 50 crores of losses over the next 2 to 3 quarters to close down the Middle East as well as the Indian subsidiaries, right?
The Indian subsidiaries, all the subsidiaries at a time not possible.
Okay.
As and when, basing on management actions, as and when, as a part of closure, if anything materialized, then the difference then need to be provided. That at this moment we expect about 20 to 50 crores in the next 2-3 quarters.
Fair enough, sir. So my last question is on the bank guarantee side. So how could you basically apprise us what is the total amount of bank guarantees that we have at this point of time outstanding, and considering that we would need more execution, with the strong order book that we have, how much more room do we have in terms of availability from the bankers?
As of now, the limits available to the company is 7,500. 1,500 crores. Against that, about 6,500 crores are already utilized.
Okay.
1,000 crores is available still.
And do you foresee that this 1,000 crore would be good enough for the kind of execution we're looking at next year, or you might have to go to approach the bankers to probably?
This is sufficient, but we are also trying for additional limits of 500 crores.
Additional limits of 500 crores. Okay, and that you believe should be sufficient?
Yes, that will take care of the new orders.
Fair enough, sir. So lastly, we received the cash for the UP Expressway project, right? You mentioned on 1st of Jan.
Yes.
Fine, cool. Thank you so much, sir. Thanks for answering my questions, and wish you all the best.
Thank you. The next question is from the line of Shrav Shah from Dollar Capital. Please go ahead.
Yeah, thank you. Most of my question has been answered. Sir, this FY18 in terms of the top line, last time we have told around 8,000 plus crore kind of guidance. So now what is our revised guidance?
Around 8,000 crores should be there.
Okay. And sir, can I have once again order book, order inflow and revenue breakup for once again?
Yes. Now buildings division order received is 12,317.
Okay.
You want segment wise or total?
Yeah, segment wise, sir. Order book, order inflow and revenue.
Okay, 12,317 is the building division order inflow, and order executed is 2,467.
Okay.
Roads order booking is 4,083.
Order executed is 301.
Execution is 301.
Okay.
Water and railways 3,057. Booking 1,584 executed.
Okay.
762. 524.
Pardon, sir?
524.
762 is booking and 524 is executed.
Okay.
Execution 900 and 210.
Okay.
That's 495 and 19. International no order booking. Execution is 449. Okay?
Okay, sir. That's it from my side. Thank you.
Thank you. We'll take the next question from the line of Prem Khurana from Anand Rathi. Please go ahead.
Welcome, sir. Thanks for taking my question. Sir, two questions. One was basically, the first 9 months we've had almost 21,000 odd crore rupees of inflows. And just want to understand how much more do we intend to add this year and next year? If you could share the pipeline which exists in the system.
Around 4,000 crores, so we expect in this fourth quarter, and totaling to 25,000 crores.
Sure. And how big is the pipeline, in terms of that could flow to the next year as well?
Next year?
Yeah. So how big would be the bid pipeline now, from which you are expecting this 4,000 odd crore rupees, wherein we would have already placed bids or in the process of placing bids?
Asking pipeline.
Water division 1,174 crores.
Again, segment wise we are asking that.
No, broad number would do so.
Broad number. Segment wise you are asking, or only how much?
How much is the total pipeline?
Pipeline already 2,100 crores are there. We are about L1 position.
Okay.
And we are under tenders not open or submission like that.
Sure. So okay. Under tenders you said how much would be the number? So 2,100 crores is L1, right? So beyond that, what is the number? Wherein we are yet to place bids, or wherein the bids are yet to be opened?
About 2,000 crores are there. About not open or to be submitted like that.
Sure. Okay. So you're expecting 4,000 crore rupees in Q4. We have 2,100 L1, which ideally would get converted into firm orders. So beyond that, you have 2,000. So essentially, you're saying entire number would come through, right? Beyond that, we would have some more projects wherein we are expecting some orders, right? So how much could that number be was what I want to understand.
That is not known. Only to the extent L1 only we can say.
Sure, no problem. And second one, if you could have shared, status on some of these recent orders that begged. So one would be NBCC, one road project. 2,000 crore rupees of road project in Andhra. So have we started working on all these projects, or we had to start working? Basically, I want to understand, because given the fact that the execution timelines seem to be stringent.
Already the 2,000 crores NBCC order started.
Okay.
Similarly, the road projects also, some of the road projects, they started the groundwork, and some of the projects still under handing over of the work fronts and designs, drawings.
Sure.